Hello, ladies and gentlemen. My name is Greg Michalowski, and I wanted to take a technical look at the dollar versus Canada. The catalyst or the impetus for this look at that currency pair is a post that Adam just put up titled Impending Recession Risk to Weigh on the Canadian Dollar by US Dollar in Canada. And this is from Bank of America's analysts. It's their trade idea, and it talks about fundamental reasons why the dollar versus Canada is a good buy at these levels. And so I thought I'd take a look at that from a technical perspective to sort of see if they dovetail, if the idea is a good idea from a technical perspective or is it a bad idea. So I'm going to sort of have a bias to the upside view from it from a technical perspective. So let's take a look at the hourly chart and see what that says. So if we look back at this hourly chart on June 28th, way back here, the price bottomed at 128.18.5, and the price started to move to the upside. And on this day, July 14th, from last week, the price shot to the upside. What was the catalyst for this move to the upside? Well, the Bank of Canada raised rates by 100 basis points. And we also had CPI data come in the U.S. as well that day, and the price moved sharply to the upside. The high price moved up to 132.228, and as you can see on this hourly chart, the price then started to correct back to the downside, moving a fairly decent way away from the high price in the day. And then the next day, the market tried to move higher, didn't get very far, and then started to move to the downside. Since then, 5 of the last 6 trading days have seen lower levels. This is the only day where we had a small move to the upside, down day here, and today we are still lower on the day, just barely, but trying to stay lower on the day. So we have seen a retracement or a move all the way back from the move to the upside all the way to the downside where we started this whole move. The low price today reached 128.21, just 3 pips off of this low from 128.18.5. So I call that a lap. The price action was a lap. It did a lap to the upside and downside, completed the lap, and now what? Okay. Well, the good news is that buyers leaned against that level. So risk could be defined and limited against this level from a technical perspective. If the price were to have gone below that level with momentum, I would have expected that this chart would look different, that the price would have moved lower from that. Why? Because it broke the key technical level. And that is a bearish development, but it didn't. So we are seeing the buyers instead start to stick their nose in the water. So Bank of America's trade idea was a buy the dip idea. Buy a dip against this low right here. They may have known about it. They may not have known about it. I don't know. But from my perspective, it's a good trade idea, or at least it's a good trade idea because risk can be defined and limited against the old low. And that's key. If I'm wrong and the price goes below that, I lose a little. If I'm right and Bank of America's trade idea fulfills itself, they're looking for 133, which takes the price above this high. So there's a lot more room to the upside. Remember, if the price were to go below this level and then bounce back above, it doesn't mean that I can't get back in on the failed break, okay? So trading from a technical perspective is about putting the odds of success in your favor, lowering your risk. Risk is below that level, but then looking for the next trade, okay? And if that price were to move down and then break back above this level, I would get back in from the long perspective again because it failed. The break failed. Okay, so now let's go move a little bit further. And what we've seen in price action today is the price moved above these lows right here. These were lows that were higher than the extreme low right here. So the market through here was saying, we're not going to go to the new low. We're going to make a higher low. And indeed, the price has been able to stay and move away from that level. More recently, the price moved above the lows from this week, from Wednesday and from Thursday, and that's another bullish development here. We're currently trading above the 128.58 level, which is a high of these lows right here, which is a bullish development as well. So technically, from that perspective, from all those perspectives, the trade is looking good. I would be interested in buying the dollar versus Canada, along with the Bank of America's fundamental view. The risk is now close risk is now this 128.37 to 42 area. That's the closest risk. And a further risk would be the 128.18 level. We don't want to see the price move below 128.18, right? Right. Okay. Now, Are we out of the woods? Are we out of the bearish woods yet? Yet. No. Yesterday the price moved up and tested the 100-hour moving average in this swing area up here and found sellers near the 129.36 level, right? So sellers are in control. Today the market moved up to this swing area right here and found sellers against that level. So if I were to just look at this from the perspective of this move to the downside, the bears are still in control. The buyers still need to prove that they can take out other levels on the top side. So there are targets on the top side, including the 100-hour moving average, including this swing area between 128.92 and 129.07, and this swing area between 129.28 and 129.36. Above that is the 200-hour moving average at 129.66. All those levels need to be broken if Bank of America's idea of moving to 133 is in the cards, okay? And that will happen over time, of course, but we're off to a good start on the hourly chart. That's what I can say here so far. With risk here, I'm all for the trade. So now let's take a look at the daily chart from a longer term perspective, because there's another reason in this chart that gives me a bullish feeling. First off, the Bank of Canada interest rate decision failed on this move to the upside here. We had a high here, a high here, a high here. We broke above this trend line, but as you can see the next day, the reason why the sellers came in the market on this day right here is that the price couldn't get back above that trend line. So if you can't get above the trend line, sell. And that's what they did 5 of the last 6 trading days to the downside, into this support right here where we've seen a bounce to the upside. Now the other thing off this daily chart, that if you blur your eyes a little bit, what do we see? We see a move to the upside, a move lower, a break to the upside right here, a breakdown to this level right here. What is this level? This is a neckline, okay? This is a neckline of a potential head and shoulders formation, which would be bullish in the short term here, right? So as long as a neckline can hold, reiterates the idea that as long as this support level holds, the price can move to the upside here, maybe complete the right shoulder. That would take the price near the 130.50 to 130.70 level on the top side, maybe give or take on the top side. So I don't necessarily see 133 like they do, but I could see the price moving up to this level right here if the head and shoulders were to play out. So that's another reason why this idea is a pretty good idea from a technical perspective. Now, getting above the 50% retracement at 128.69.7, we're currently trading 128.60, is another hurdle that needs to be done. We need to see momentum above that 50% retracement of this move to the upside in order to give a more bullish bias from a daily perspective, but we're working on that, and we have our risk levels from the hourly chart below here and here and here to lean against and to limit our risk or our loss if the market doesn't go our way toward those topside targets. So there you have it. I'm all in on the idea of buying the dollar versus Canada because risk can be defined and risk can be limited. We'll see if it all plays out the way Bank of America says so. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.